What is up, guys? Happy Monday. Today, we are going to focus on the basics and we are going to focus on the power of risk to reward and why it is so important and why we need that on our side, right? So, what I'm going to break down is the inverted head and shoulder buy opportunity. Inverted head and shoulder buy opportunity, right? But I'm going to draw it with the candles so it makes more sense and why we run our risk to reward. Okay. So, again, when do we look for inverted head and shoulders, guys? Right now, we got to start breaking things down. When do we start looking for inverteds? When the market is in an uptrend. When we can see that the market is flowing and heading upstream, I want to continue swimming and flowing upstream with that current. Give me a 2 if that makes sense, guys. If we can continue to see breaker structures to the upside and the market is flowing upstream, I want to continue swimming with that upstream, with that uptrend, right? Now, when can we find or where can we find these inverted setups? Where can we find these inverted setups? These opportunities happen around here, right? So we're trying to catch these plays as low as possible. And if we don't, there are times where the market, when it pulls back, it's going to come back and give us that right shoulder. So let's go ahead and break that down real quick. This market is going to go ahead and pull back and make structure. Pull back and make structure. If we can catch the opportunity here, that would be amazing, right? If we can catch that here, that's amazing. That way we can go ahead and send that market back up. But what if the market just continues and does not give us the right shoulder that we're looking for, right? What happens if the market doesn't give us the right shoulder that we're looking for right away, or the starting point that we're looking for right away? If it doesn't give us the starting point that we're looking for right away, right? If it doesn't give us this entry, then takeoff, that's fine. When the market starts to make this pullback, when the market starts to make this pullback, we are hoping that the market can come back down to this area and send that market higher. Give me a 5 if that makes sense. Awesome. So let's go ahead and break this down. Because if the market is in a downtrend, we should not be looking for inverts, right? Only uptrend. So I'm gonna go ahead and break down an inverted head and shoulder buy opportunity. Okay. I'm gonna go ahead and create some type of consolidation, right? Because I want it to look super clean. So guys, it's important that we wait for the market to create this structure. Super important, right? Like we don't really have a setup when it comes to levels until it starts to consolidate. So like we shouldn't be like playing too aggressive and trying to force a setup. If you literally do not see the market consolidate, we don't really have an inverted head and shoulder setup, right? Or if we don't have breaker structures to the downside, we don't have that left shoulder cooking. And that's what this consolidation is. If we can see consolidation, that is our left shoulder, right? Now, the thing is we want to see and catch, or at least identify. We don't want to catch, but we want to identify the liquidity sweep to the downside or the breaker structure that happened to the downside, right? So if this is my support, and this is my resistance, right? The market is obviously now starting to create liquidity, right? Creating liquidity. But guys, let me know. Did we break structure to the downside or the upside first? The downside, right? So we want to go ahead and label that as my bearish break of structure. Okay. If you want to label it a liquidity sweep, because obviously if you do look at it like smart money and you are labeling this as liquidity, that is liquidity being built. And as soon as the market breaks structure to the downside, whether it's just a wick or a candle, that is also a liquidity sweep. So just want to keep that in mind, guys. Okay. So understand what I'm showing you right now is smart money, but I'm showing it to you in levels language. Okay. So when you see that first break of structure to the downside, levels is going to call that my break of structure. Now, why is it important that you're welcome? Why is it important that we label this my break of structure, guys? Does anybody have an idea? If you don't, just put a question mark. And if you think you do, even if you're wrong, go ahead and let me know. Why is this BOS important? If you don't know, it's okay to put a question mark. Let's go. Let's go. I like it. I love how you guys are giving answers. Now, the thing is, right, remember, we're in an uptrend right now. We're in an uptrend. So technically, we should be following the uptrend, right? There should probably be a starting point here where we can catch this buy opportunity, right? But I want to focus strictly on the inverted head and shoulder. But I want to show you guys why the BOS is so important, because once we get this change of direction, this left shoulder is going, I'm sorry, this BOS now becomes your left shoulder. Give me a 10 if that makes sense. That's why it is super, super, super important that you understand breaks of structure. Because if you can see that break of structure to the downside, and you can see we have that change of direction to the upside, we now have a head and shoulder setup. Okay. We now have left shoulder, the head, this area that the market swept liquidity, the area that gave us the break of structure to the downside. This is now my head. Once we change direction, we now have a setup. Give me a 2 if that makes sense. Awesome. If you have any questions, guys, please, please, please let me know. Okay. Please let me know. Now, I'm just going to leave this like this just so you guys can understand we're in an uptrend, right? No, I want to delete it because I want it to stay fresh. You guys should understand we're in an uptrend. I've said it like 5 times. Okay. Now let's go ahead and break this down, because I want to give you guys a very clear example. Okay. Now, at this point, we don't have the change of direction yet, but we're anticipating it, right? Because we just caught these buys in this area, or maybe we're waiting for confirmation. We're anticipating the market to make its way and close above. So let's go ahead and make that happen. Market's starting to make its way. Let's go. Let's go. We're starting to see some blues, baby. That trade that we took, profit. That trade that we took, profit. Let's go. Let's go. Now, this is important, guys. This right here is super important. We have to find the last selling candle before the breakout rally. Before the breakout rally. Okay, so let's go ahead and change this up, actually. Let's go ahead. Change this up just a little bit. All right, cool. Guys, do we have our change of direction? Yes or no? Yes. So let's go ahead and label that. Let's go ahead. Change of direction, right? That confirms our buy bias now. Now, this is the thing. This setup here gives me two opportunities, right? Because we have the starting point that is right here. And we have the left shoulder that is right here. So we have two opportunities that we know work very, very well. We have supply and demand along with head and shoulder / smart money. Okay. Give me a 1 if this is making sense, guys. Does anybody have any questions so far? Any questions? Any questions? We're good? Okay, cool. So again, guys, nothing changes, right? Once you're able to find your breakout rally that gives you the change of direction, follow that rally back down to the last selling candle. We found it. Okay. Now, this is the thing. Once you find your last selling candle, you have to find the lowest wick in that area. That's going to be your stop loss for the starting point. Now, that's the thing, guys. The starting point can have its own stop loss, and the head and shoulder has its own stop loss. You guys got to know that, right? The starting point stop loss is going to be the lowest wick. Once you find your starting point, it's going to be the lowest wick in that area. This is going to be your stop loss for the starting point. Give me a 2 if that makes sense. Now, when it comes to the head and shoulder, your zones are from wick to body, and I'll go ahead and show you that on the live chart. But when it comes to the head and shoulder, your stop loss for the head and shoulder is the dominant low. And let's go ahead and just add a wick right there too. Why not? Because we do add wicks. So instead of risking, X amount of pips looking like a giant stop loss, right? We can go ahead and minimize like this. Give me a 5 if that makes sense. Because I know nobody wants to risk this. I get it. That's huge, right? Doesn't really benefit you in any way, right? But we also have a zone right here we can use, right? Can you use this? Can you use that low? Yes, you can use that low. That is the dominant stop loss for this whole area. Why? Because this is the dominant low. We have higher high, higher low, higher high. So this is the dominant low. The market should not break and close below that low if the market is going to continue bullish. Does that make sense? Give me a 1 if that makes sense, guys. So yes, you can use the low. Why? Why can we? Because it's the dominant low. Higher high, higher low, higher high. This stop loss is technically my need change of direction line for sell opportunities. So we are not expecting, like, we want the market to continue higher, right? We don't want that change of direction. We want to continue that bullish movement, right? So we can use this. I just know, like, that's too many pips. Like, it doesn't benefit you in any way. So we might as well run our risk to reward, right? We have a zone here, and we have a zone here. Now, the thing is, guys, we don't know what zone the market is going to respect. There has been plenty times where I want this low zone, so I do not take this because I'm like, you know what? I like the head and shoulders. Market always respects head and shoulders. The market will always come to me, and that is not the case. Okay, it's not the case. There are times where the market will even make its way down, consolidate in my zone, and I'm thinking, yo, it's gonna drop down, give me a better entry, and continue going higher. Guys, that is also not the case. There have been plenty of times where the market touched it, consolidated, and just continued going higher, making new highs. Take it next if the liquidates at the first entry. Yes, exactly. So we want to hold our ground, right? We want to hold our ground. If the market makes its way down here, let's go ahead and take some opportunities, right? Because the market can easily make its way back up. Now, if the market wants to go ahead and be toxic and then hit our stop loss, okay, cool. This trade was not the one. We took one loss. We are down 1%. But if we can get into this trade and continue going higher, we possibly have a 1 to 3 on our hands, which at the end of the day gives us a plus 2% risk to reward. And that's not taking into consideration this next opportunity we could be capitalizing on if we could capitalize on it. I'm not sure what you're trying to draw. I would much rather you unmute or draw and unmute. I'm sure that would make more sense.
Yeah, I'm basically just saying like take it next if it liquidates at the first entry. So if we take the first setup, right, and then that one comes to our stop loss, well then our better entry is if it comes all the way down. We basically just then take our entry here and then can re-enter as like a secondary after this one being the primary because the market came down.
So the only thing I'm struggling on is because you're drawing up here.
Well, I'm sorry, that's where the box is coming from.
Okay, got you.
Yeah, the whole thing.
This right here would be your first entry.
Correct.
Okay, got you. Yes, that would be your first entry. We would like to take that. Now, if the market does liquidate and go lower, yes, we definitely want to take this next setup to shoot the market higher.
And then we can take, I guess, use this as an entry here, such as if it does happen to liquidate here and then continue higher.
Great question. So let's go ahead and cover that real quick. That's a great question. So I don't like to do that personally, right? I really don't. I like to stay fresh, right? I personally like to stay fresh. So this is what I like to do. If the market makes its way down here, gives me an opportunity, ends up hitting my stop loss, it is what it is. Let's go ahead and delete because this was not the zone. Okay. Are you with me, JQ? Awesome. Now, on the way down to my buy zone, what should we be doing every time the market breaks structures to the downside? Adjusting. Yes. Let's go. Stop. This is my breaker structure. That's my breaker structure. That's my breaker structure. JQ, where should my change of direction line go? Out of all of this area, where should my change of direction line go? Well, this is my BOS, right? So if this is my low, this is my high, that this high made this low. Yes. This low made this high made this low. So I want my change of direction there, right? So let's go ahead. We'll put that down as of right now. That is my change of direction for buy opportunities. Now, let's say the market wants to go ahead, give me my very last breaker structure right here. We need to adjust because once we change direction, my BOS turns into my left shoulder. Okay. So the same thing that happened here, we want the same thing to happen right here. Nothing changes. So if this made sense to you and you understand that, we want the same thing to happen here. nothing changes. Okay, so we want to adjust our change of direction line. Now, once the market gives us that change of direction, we have a brand new setup. We should already be in on this one right here. Are you with me? We should already be in on this trade setup right here. Now, once we get this change of direction line, or just change of direction. Cool. Notice this little hiccup. Why did the market slightly pull back there? This is my last selling candle before my break of structure. So again, we have this same exact opportunity here. We can take the starting point, or we can take the left shoulder. So then I would start to look for another opportunity right here. Does that make sense, JQ? When the market makes its way back, we could start looking to take that market higher. Okay, so that's why I'm saying don't fear a loss, right? Guys, don't fear a loss. If the market can give you an opportunity and give you more confirmation, we were right. Sometimes, hey, we don't know what zone the market is going to respect, so we have to run the odds. And this is where we have to trust our bias. We have to trust our strategy. We have to know our strategy inside and out. But not only that, guys, we have to trust ourselves and our brain. And we have to trust that the time that we put into this skill set is going to pay off. We have to trust that the time that we put in is going to start reaping the fruits of its labor. Don't run off an old play, stay fresh, keep adjusting as needed. Yes, exactly. Exactly. Let's go. So again, this is a hypothetical, right? But let's just say we took a loss here. We are down 1%. Let's say this trade was a winner. You know, +3. We are now up 2%. Let's say this next trade was a winner. +3. Oops. See if we could, let's go. A little funky. Now we are up +5. Now, again, guys, this requires you to be focused, right? This requires your full undivided attention, okay? If you're looking at 5, 6, 8, 9, 10 pairs, trust me, I've been there. Like, you can ask Jose, Fernanda, you can ask Miguel. Like, bro, you look at my watch list, I have everything, you know? USD ZAR, USD MXN, marking up hella pairs for no reason, right? It requires a lot of detail. Now, the thing is, the human can only make so many pressured decisions. I'm not saying you can't like make a lot of them. I'm just saying, like, if you're gonna make so many, why not just narrow it down to your favorite pairs rather than 10 to 11 pairs? Does that make sense? Give me a 2 if that makes sense, guys. Like, if you're gonna be focused, why not just focus on? And the thing is, too, guys, is like when you guys enter trading, like a lot of us just start seeing opportunity, start seeing green. I bet you guys, if y'all took marking up 10 pairs this seriously, like you had your 6 classes back in high school or college, man, y'all will be doctors, bruh. Swear to you. Right? But guys, all we need 2, 3 pairs. That's how I think about things. It's like, bro, and I would think about this to myself, like, bro, I would focus on hella pairs, 30 pairs, 20 pairs, but I wouldn't focus in six classes. Ain't that a mother? Right? Crazy. Guys, does this make sense? Does anybody have any questions about this right here? I need to know. because as soon as we get onto these live examples, we're going to start cooking. What do you guys want me to look at, guys? Let me know. What pairs would you guys like examples on? So gonna be like, NAS. NAS. GBP, USD. Awesome, let's go. Now, let's go ahead, check this out. As of right now, this is what I'm seeing with GBP USD. I can see we have a break of structure to the downside. And I can see we have a slight change of, well, that's not a slight, that's a nice change of direction to the upside. Right. And I could also see we're building liquidity and hanging out up here. Okay. So notice, look at this, guys. This is the daily starting point. We have higher high, higher low, higher high. This was a daily buy opportunity. The market just was toxic. Market was playing with your emotions, was picking pockets, right? But that was a buy opportunity. Now, let's just say you took, now not every opportunity is going to be like the example I gave, right? It is what it is. There are things that happen in the market. Now, let's just say obviously it gives you an opportunity here, sends the market higher, but it hits your stop loss. So let's just say, we're down 1% right now. We had our second opportunity here. Market said, yeah, not today. Hit our stop loss. We're down another 1% there. But then what happens? On the 4 hour, we get a change of direction. But at the same time, the market change on the 4 hour, the market changes direction, but it doesn't hold and create any type of liquidity or target points. So when we do fly up, we have a TP to come back down to. That's one, right? That's one thing I'm looking at. Two, this is the daily setup. We have a wick, right? We have a wick, which means it definitely hit your stop loss, definitely picked your pockets, but the setup is still valid. The buy opportunities are still valid. It was just toxic in that moment in time. Okay. So this is what I'm looking at. Nasty breakout candle. The most visible last selling candle right there. That's my starting point, right? Now let's drop down to 1 hour. There you go, mosquito, bro. Now let's drop down. Look at the opportunity, guys. Guys, I don't lie to you. I will not lie to you. Look at this. Where's my last selling candle? Right here. Where's my BOS? My last BOS right here. My last BOS before my change of direction becomes my left shoulder. Okay. My left shoulder zone is from the lowest wick to my closest body, which is going to be this gray candle here. Now look at this, guys. Where's my lowest wick for my starting point? In my opinion, it's right here. If you want to have a tighter stop loss right beneath that wick, you can. But I mean, I can see that the lowest wick in that area is right here, right? So that would be my stop loss for the starting point. Now, if the market wants to go deeper, it may. Right? So again, we could take an opportunity. It could hit our stop loss. But as soon as it hits our stop loss, it can put us right back in. And we can start looking to take some more buys. Give me a 2 if that makes sense, guys. Let's go. Let's go. And the thing is, too, guys, like I'm just trying to show you the opportunities, the areas in the market that you can run your risk to rewards off of, right? But in reality, do you ever have to be the first touch on these zones, guys? Do you ever have to be the first one in on these zones? No, we do not. We do not have to be, let's go, similar zones. Let's get it. We do not have to be the first ones in. What can we look for in order to have extra confirmation, guys? What do you guys think? Let's go ahead. Give us some answers. What do you guys think we need to look for in order to have extra confirmations so we can feel confident in taking buy opportunities? Let me know, guys. Let's all be wrong. Let's go. Use your brain. Think of something. Put it in the chat. Let's go. Let's get it. Let's go right now. What do we need in order to have confidence and more buy opportunities? Love it. Liquidity to the upside. Yes, that's true. Change of direction. That's what I'm looking for. Liquidity sweep. Yes, I would love one. Change of direction. Yes. So guys, notice how everything is hand in hand with each other, right? Other than really like what Jose said, liquidity to the upside, that would be more something like this, which is true, right? We do want to see liquidity being built and left here as target points, right? So in the future, we do have a target to reach. That is true, right? But in order to feel more confident and extra confirmation near our buy zones, I would like to see a change of direction off of this. Now, Nova, this goes hand in hand to what you're talking about, right? We would like to see a liquidity sweep, right? If we can go ahead and drop down, give us a break of structure, and if we start creating liquidity here, would you consider this a liquidity sweep? Would you consider that a liquidity sweep, Nova? You tell me. You tell me. It's okay to be wrong. Let's be wrong. I would rather you, let's all be wrong, bro. Let's all be wrong. Let's go. Because sooner or later, you're going to start remembering like, oh, nah, it's not that. It's this, right? Let's go. Yes, this would be a liquidity sweep. Boom. Liquidity sweep. Now, what do we need to see next? We need to see that change of direction to the upside, right? If we don't feel comfortable taking this trade off the first touch, we can wait for this change of direction so we can feel comfortable taking more buy opportunities, or at least taking this buy opportunity here. Give me an 8 if this makes sense, guys. Let's go. Let's go. Let's go. Let's go. I mean, to be fair too, guys, I mean, because these zones are fairly close to each other, this would be a setup I wouldn't mind risking a little bit more. But that's me personally. I mean, this is a Forex pair, and that's only 29 pips, right? So I wouldn't mind risking, 33 to 35, but that's me, right? I wouldn't mind. If you do mind, then hey, you can put your stop loss right here, right there. Now you're risking about 13 to 14 pips. Okay, up to you, because at the end of the day, we know the dominant stop loss is the dominant low. I remember from the last call you said no change of direction, no opportunity. Yes, ma'am. Let's go. Let's go. I love it. I love it. That's what I'm waiting for with GBP USD. But however, guys, there's also the counter trend, right? Just because we don't really, or I personally don't take many counter trends. I don't know if you guys do or don't personally, but I don't personally take very many counter trends. However, we can still mark up the structure for extra confirmation, right? This is a break of structure. Now I'm seeing something in here. There's a little hiccup in the structure. So let's drop down. I'm seeing that last buying candle. That's a pretty decent counter trend opportunity. That's pretty good. Not going to lie. Pretty good. But now let's look at this, right? my break of structure to the upside, my change of direction line. Okay. So if the market does continue down, there's a possible another counter trend before we get down here. Okay. Keep that in mind. Keep that in mind. But again, just because I mark them up doesn't mean you have to take them. I just like seeing that the market is respecting all of my zones and everything that I'm looking at, right? Because once I see the market is we're just respecting these zones that I have, I feel confident when the market starts to come down here. Because once I start seeing things play out and I tell myself, yo, you wait for this, we can have an opportunity. Because if you've been seeing things happen like this on the way down, why wouldn't it happen for you on the way back up? Right? So marking things up like this makes me feel confidence, right? You're right. You've been correct, right? If you guys feel like you can take the counter trend opportunities, if you feel like you can take these sell opportunities, then that's for you to decide. Now, that's not me to tell you yes or no. That's for you to decide. But same rules apply. Would you guys consider this a break of structure to the downside? Yes or no? Would you guys consider this a break of structure to the downside? Yes. We play it the same way. This is my last buying candle before the breakout rally. Does the market create liquidity? Yeah, it does. Trend line, right? It creates trend line. So there's a possibility that the market does continue lower. I mean, that's a pretty decent counter trend. I'm not gonna lie. That's pretty good. So we'll see. We'll have to take a look. We'll have to take a look about what it wants. But I do like zones down here. I do feel like GAU can go a little bit lower, especially the way, oops, I didn't want that deleted. Especially the way it's building liquidity right here. I feel like the market can continue down, trickling down tomorrow, right? So we might have an opportunity here tomorrow. We might have an opportunity here Wednesday. It all depends, right? It all depends when we get the change of direction. No change of direction, no opportunity. Let's go. Let's go. Let's go. What other pair you guys want me to look at, guys? Let me know. Let me know. Let's see. What did you guys say earlier? I just saw GBP USD. UJ, let's go. Let's get it. Let's see. Let's see. Let's take a look. This is a pretty good opportunity here too. This is a daily opportunity. So again, guys, this will happen on every time frame. That is a starting point. Why is that a starting point? Well, we do break structure here, here, and it looks like here as well. So yes, this 3 candle breakout rally broke a whole lot of structure to the downside. So this last buying candle is my starting point, and it looks like this wick is the most defined highest wick above that area. That's my stop loss, right? But now let's go ahead and take a look right here. And I love when the market gives me some decently clean structure. That way I don't really have to drop down. Like if we can see, guys, that we can have a break of structure, that's a break of structure. Now, if we can see that we have a break of structure, guys, that's a break of structure. I don't have to drop down to the one hour time frame to know that that's a break of structure. Okay. This right here, my change of direction. My shoulder area is here. My stop loss to that opportunity is right there. Give me a 10 if this makes sense for USD JPY daily time frame setup. And I guarantee you, same thing happened right here. Notice how this candle is lower than that one. On the 4 hour or 1 hour, I guarantee you there is some type of structure here. But look, on the daily time frame, this is my change of direction. My starting point hit stop loss. That's a nasty starting point, right? Would most likely use a 4 hour or 1 hour up in this area. But nonetheless, this would have been my stop loss. The market hit stop loss. Yes, it does. But now let's see if we can go down over here and see an opportunity. Let's see if we can replay it. 4 hour time frame. Let's go. Can you guys see it? Give me a 1 if you guys can see this. That wouldn't be a break of structure. That would be more of a liquidity sweep, right? My change of direction would be here. My starting point on the 4 hour time frame is this big ass candle. And my shoulder is the highest wick to my closest body, which is this gray candle here. So now let's go ahead. Let's go back up to that daily time frame. Stop loss is right here. Look at it. Stop loss got hit. You're down 1%. Stop loss right here got hit. You're down 1%. Comes to the head and shoulder. You're back up 3%. The same setup happens right here. Same exact setup. We look for nothing else. We literally look for nothing else, guys. Market comes in, gives a little bit of profit, probably gives you enough to break even or partial out at least, which obviously gives you a nice little break even, right? That's already a 1-to-1. I would have partialed out, which eventually would have hit me break even. But now look at this, nasty snipe, the nastiest snipe of your life. Daily time frame. You guys don't even look at the daily time frame, but look at these nasty movements. That already hit 1 to 3. I would like to take these lows would be a 1 to 7. But look, 1 to 3 was taken. So now look, you're up +2 off of these two setups that happened over here. You took, I would say that's more of a break even than anything on this time frame. So I mean, let's just put, we'll just put +0, break even, and then a +3. That's super ugly. +3, we're up +5. And again, I didn't even leave USD JPY. You see what happens when you focus on one pair? Good things happen to you. Is this starting to make sense for you guys? Give me a question mark if you're confused. Like if you're just like, yo, I don't get it, bro. You're breaking it down, but honestly, I just do not get it. Give me a question mark if that's you. You could even send it directly. I won't say your name. I might not say it. I got to put you on blast real quick. Good. So that means everybody is understanding. I hope, right? I mean, I can only hope since nobody is saying anything else. But now look at that. Nasty movement. Okay. Now let's take a look. What is going down? What can we see? What can we see here, guys? I have a nice break of structure to the upside. Where would my change of direction line be, guys? Where would my change of direction? If this is, well, that would be my early sign for sure. Early sign of change of direction. Yes, JV. Yes, JV. My change of direction would be here. For more confirmation. I know for you, Sonia. So I know what you know what you be doing. I know you be trusting that early change of direction. I know you be smacking the markets using that. I know you personally feel comfortable using that. Go ahead and continue to rock with it, right? But if you guys do not feel comfortable rocking with this early sign, use the dominant low. Now, let me tell, I believe there was somebody who put a line up here for change of direction. Let me tell you why that is not the line. Because we're looking for sells, right? Because we took sells here. If we want to continue taking sells, notice how we are breaking structure to the upside. We have a BOS. We have a BO. a BOS, right? If we want to now look for sales, we want to look for more sales. If we have a high here, this high made this low made this high made this low made this high. If we want to reverse, we need to break and close below this low here. Does that make sense? Give me a 1 if that makes sense, guys. Let's go. Let's go. I love it. I love it. I love it. I love it. Love it. I love it. I love it. But now, in order to get another break of structure, that would be my zone, right? Higher high, higher low, higher high, higher low. If the market makes its way up to make new highs, boom, we did get a break of structure. Let's continue looking for more buys. So now that we have that, let's drop down to the lower time frame, 4 hour. Now I do like sells based off of this structure here. Like it is holding up, this low is holding up. But what I really like is my break of structure to the upside and my change of direction to the downside, which gives me a nasty starting point right here on the 4 hour, and on the 4 hour, my left shoulder is here. Let's go to the 8 hour, 8 hour starting point. Let's go to the daily. I'm not using that one, too huge. But again, after we change direction, what happens? Left shoulder, neckline, head, change of direction. What happens, guys? What would you guys consider this? Liquidity. And anytime we see a change of direction followed by a lot of liquidity, I like to run my odds with those. And my target point would be pit stop 1, liquidity. And if we can continue those sells, that would be great. That would give us extra confirmation the market wants to continue selling. Now, this is the thing. I can already see a slight shift inside of the liquidity, break of structure, change of direction. It looks like we already rejected off of the shoulder here. If we continue to the downside, if this move continues to the downside and gives us this higher time frame change of direction we are looking at, oh yeah, when the market makes its way, I don't know when exactly, but whenever the market makes its way back up into this area, with the BOSs and my starting points, whenever it wants to go ahead and give me that nice little change of direction, we're running these odds and we are swinging this to the free falls. Give me a 2 if that makes sense. If the market holds here and continues to drop, and if we even continue to do this whole thing over again, where the market just continues to just chill and create liquidity and then starts to make its way back up, if we could end up back where our BOSs are or our starting points, I would love to see if we can get into some sales and swing this mug back down. Swing it back down, baby. Look at this liquidity. Will love to swing. I love it. Give me that. Give me that. I ain't mad at it. But as of right now, this is what I'm seeing. I wouldn't really pay. And this is the thing, guys, right? This is where you guys have to decide what you personally want to do. You, the trader, right? You know, Carlos, iPhone, Jose, JQ, Julio, you know, Marlene, Nova. You have to decide what you want to do while the market is still inside of consolidation. I personally do not play around inside of consolidation. I just don't. I would rather miss out on a move and then catch the second one. That's me personally. Again, it's all preference based, all what you like to do, however you feel comfortable. But what do you like? Right? As of right now, it's respecting it, but it does look like it wants to continue pushing up a bit higher. So let's just see. We'll see by the morning. I'm looking at this and I'm seeing that it created all this liquidity, right? We took it out. Will we also get a break of structure? And it looks like it's coming back very sharply. So this is what I'd be looking at. Left shoulder, head, change of direction. We might push higher. But at the same time, we're still inside of liquidity, you know? So it's all whatever you want to do, guys. But for me, I'm waiting right here, or I'm waiting for more confirmation to the downside, which is my change of direction. So I can either catch the opportunities here or catch the opportunities here. So again, guys, it's all off of preference. If you are scalping USD/JPY, you're probably having a filled day in here. But if you're anything intraday or probably swinging USD/JPY, you're probably just sitting on your hands. So, you know, trade responsibly, guys. You know, your style might not be anybody's cups of tea, you know, but if you're seeing progress with it, what can we tell you? You know, what can we tell you? If you're really seeing some results, you know, you put in the work, you've been back testing, you've been putting in the hours for yourself, and you've been seeing all these things line up and it's working for you, what can I tell you? You know, at the end of the day, there are going to be opportunities everywhere. You know what I'm saying? If you're stacking cash, you ain't wrong. You know what I'm saying? You ain't wrong. The only thing I can give you is tips that have helped me. And that's mainly it. You know, I'm giving you all the information I know, all the tips that have helped me. So you can go back, run with that information, see if my tips help you. And if not, you know, it is what it is. We continue to evolve and develop. And that's why we have the education. We continue to grow. Right. But do we have any questions before we hop off tonight's call? Let me know. Let me know, guys. Let me know. Do we have any questions? Are we good? Let's go, fam. Let's go. Let's go. I hope you guys got some clicking moments because every setup, guys, unless the starting point is like stacked up on the head and shoulder like equally, most setups are going to have two opportunities. I'm telling you guys, watch the educators. A lot of these educators have two opportunities, right? And they're running their risk to reward. That's what we do. Risk to reward have my back. Like I got its back. You feel me? Risk to reward, so important. It gives you confidence because when you have an opportunity, a trade opportunity, we cannot be scared of whatever happens. We have to stay locked in on the information we know, on the information that is being presented, and we need to make the right decisions when it's time to, right? So with that being said, guys, I hope you guys like this call. Whoever missed it. In my opinion, these last 4 calls about the power of risk to reward have been fire. And I know anybody who has been focused and plugged in has definitely been having clicking moments, right? So I hope you guys have a good trading week. Trade responsibly, mark up your charts, send in your charts, and let's continue to work, develop, and get better, guys. I will see you guys on Friday. Peace out.